Okay, this is Chapter 11, Participation Points. And I think you've got most of this down, but we'll go through it real quick here. A, we issued 180,000 shares of common stock for par cash. Okay, first off, what accounts am I using? Well, I'm getting cash, right? So I'm going to debit cash, and I am issuing common stock. So I'm going to increase that. So how much? So I have 180,000 times the par of 25, and that comes to 4,500,000 in both locations. And I think I need another zero on this one. So that's a relatively, you're probably pretty used to that one by now. That's a relatively common transaction we've been doing all week. Second one, we issued 400 shares of common stock to an attorney for organizing the company. Well, instead of cash, we're going to say organization fee expense. Same thing as cash. And we're going to increase common stock. And how many did we? 400 share. So, without any further information, I'd say it was 400 share at par, and it was worth $10,000. So now we have the same entry as above, except instead of cash, we are exchanging services. Now for C, what has C? C is we're issuing 30,000 common stock in exchange for land, buildings, equipment, and they have a market value of 200,000, 550,000, and 135. Well, let's get the stuff we know first. So copying these up here, this is going to be buildings, this is going to be land, this is going to be equipment, go away. This is going to be equipment, and let's put those amounts in right now. We also know it's going to be common stock, right? We just don't know for how much. So now we have buildings for 200,000. I have, I got mixed up. Land is 200,000. This is 550,000. And equipment is 135. Now we are, how many? 30,000 shares. So we know it's 30,000 times 25, which is this right here. This is going to be $750,000. And if I add these up, I'm going to, why isn't that giving me a zero or a comma? I'm going to find that these two don't match. I mean, as far as balancing. And the difference is, well, the difference is equal this plus this plus this minus this. $135,000, and that becomes your additional paid-in capital. Now, it's no different from these up here, except for these were at par, and this one is above par. They sold for above par, and that's because of the value of the land and the assets they acquired. And finally, we issued 8,500 shares of preferred stock at $130 each. Well, okay, $131. What are my accounts? I have cash, and I have, I know, preferred stock. And I also know something else. I'm going to have additional paid-in capital, right? Because preferred stock is really at 120. That's its par. And they paid 131. So let's just put that down here right now. So what kind of money am I getting here? I've got cash. 8,500 times 131 equals $1,113,500. Yeah, one too many ones. And preferred stock, its par is 120, so I have to multiply 8,500 times 120, and that comes to 1020. 123. So the difference, again, is going to be what I received in cash and how much the stock par is. So I have an additional paid-in capital of $93.50. Does that make sense? So those are just your standard common stock and preferred stock. So I think I'll wrap this one up, and we'll call it Sheet 1, or common stock issuance, and then we'll just keep going down the road, or down the line.